Welcome back. You're tuned into Bazaar Morning Call and hope you're having a good morning. Though for starters, the GIFT 50 is suggesting that we pull back a little bit. Maybe a 70-80 point downtick is what we could see at the start of trade. But you've listed down all the top stocks that you need to track. Let's get some fundamental analysis going with our expert. We have Deven Choksey, MD at DRChoksey Finserv, who joins us on the show. Hi, Deven. Before we start talking about stocks, first want to wish you all the best for 2024. It's the first time we are speaking in the new year. So Happy New Year to you, your family, and your entire team as well. Deven, we just listed down a few stocks, and Hero MotoCorp was one of the stocks that Sonia told us that the operational numbers that came in, the sales numbers for the past month, was a little bit disappointing. And we know that there is still some pain at the bottom of the pyramid. That's in rural India. What's your view on the stock from here?
Hi, Nigel. Good morning and wish you all Happy New Year as well. Well, I guess I think nothing wrong with the fundamentals per se as far as the business outlook is concerned on the two-wheeler industry. On the contrary, I believe that these particular times are relatively better times for the rural India. The demands have actually stabilized and probably I think they are likely to see relatively better traction going forward. Of course, I think the month of December is something which one can possibly argue that yes, this is not the number that one was looking for. But the fact remains that I think overall environment in the rural India remains, I think, extremely positive. And that promises to remain, I think, positive for the longer period of time. So from that perspective, I think we should be seeing the growth in the business, both in two-wheeler as well as in four-wheeler, particularly in the entry segment. I think we should be seeing that particular growth continuing. Maybe I think the percentage-wise growth may somewhat taper down, I think, over a period of time, because I think the demand scenario remains consistent as against, I think, the lumpy scenario that we had seen in previous years. So to a greater extent, I believe that I think the steady growth prospects are definitely built into in the rural area, and where probably likes of Hero MotoCorp would be possibly better placed going forward, given the kind of steady growth and the demand continuing for that.
Deven, hi, good morning. But, this question also ties in with what's happening with some of the other companies that have rural exposure, right? Not rural, maybe semi-urban, like DMart, for example. Weak numbers coming through over there as well. Mangalam was telling us that, the revenue growth that they've seen is below the 4-year compounded growth rate at about 20%. So I wanted your thoughts on this entire piece, the rural piece, and what do you do with a stock like DMart now?
So, yes, Sonia, good morning. Well, I guess I think that's true, that I think when you look at the compounded numbers, I think these numbers are not looking appealing. And that's going to be the case going forward because the base effect has actually gone up. And on a higher base effect, I think the growth assumed would be, I think, a steady rate of growth and not, I think, the rate of growth which these companies have seen in the previous years. So that's a realization which is coming in across the board, I think, for most of the companies. Should this be the realization, then one would remain confident that the growth will continue, but not at a speed at which it, or not at a margin in the percentage at which I think it used to be. So to a greater extent, I think one will have to taper down the expectations of growth going forward. I believe that I think the organic growth will have to happen by way of, I think, systematic expansion into the business. And that is where probably I think most of the companies will try and make extraordinary attempts, including likes of GeoMart. We'll see this particular situation coming up for many companies. That also means that I think we are also likely to see some of the disappointing performance from the mid-tier and the smaller companies in this space. So we'll have to accept the reality that if these stocks have run up ahead of time and they are quoting at a valuation which is expensive, probably I think some amount of moderation in the valuation, rationalization in the valuation definitely is expected. It may not be the price correction, but it might be, I think, the time correction which we'll have to experience in many of these companies which are quoting it at premium valuations.
Speaking of banks, actually, let me take that question to Deven. Deven, hi, good morning and season's greetings to you. Wish you a very happy new year. Just your thoughts on the fact that the struggle continues for large cap banks, right? It's the whole market's waiting for this big move and a sustained move on banks to pick up, but we are yet to see signs of that. And also throw in a word on the RBI draft circular that came in yesterday, where the Reserve Bank is saying basically tying down how much dividend you can pay out with the level of NPA. If the NPA is above 6%, banks can't pay any dividend at all. And then there's a whole gradation that the RBI has done. Would that have any sort of a sentiment impact, particularly on PSU banks? Because in the bad NPA cycle, I mean, we know how high those levels can go. And that just means that the whole dividend aspect of owning a PSU bank, that goes out of the window.
Absolutely. Good morning and wish you a happy new year as well.
Thank you.
Well, overall, I believe that I think the shuffling in the banking counters, I think, is basically creating this kind of a situation. Earlier, I think the sale-off took place in ICICI Bank, buying took place in Axis Bank. Now, even the profit booking is taking place in Axis Bank, and I think the buying is going and shifting into banks like DFC. So it's a counter shuffling which is happening in the portfolios of most of the investors, and that could be the resultant outcome of I think whatever we are experiencing currently in some of the banking stocks. Also, I think the private sector banks, which probably will reach their price to perfection ratio, I think some amount of profit booking was justified, and that money shifted into some of the public sector banks in the last 2 3 months, and that's where probably I think one saw the kind of a movement also in the public sector banks. So typically, it's more of a money action that is being playing out, or this is being played out, I think, in the market at this point of time. I don't think fundamentally things have shifted beyond the point to any one of these banks, and I think they remain extremely strong as far as I think the loan growth portfolio is concerned. Even for public sector banks, I believe that their ability to manage the non-performing asset is far more stronger than ever before. And at the same time, I think the balance sheets have remained, I think, cleaner than they were in past. So from that perspective, they are partly justified in getting re-rated at this point of time. I don't think that RBI circular per se is going to materially impact some of the quality public sector banks. Maybe I think mid to small size banks, I think maybe slightly more vulnerable compared to the larger banks who are probably managing their non-performing portfolios well. So to a greater extent, I think to me, I think this event should be remaining muted event, even though I think it may sentimentally have some say, but it should be muted event as far as balance sheet is concerned.